One of the more involved transactions you'll have to do occasionally as a club treasurer is to process a member full or partial withdrawal. As we discussed last time when we talked about member payments, when a member withdraws assets, there's quite a bit of accounting bivio needs to do. Entering a withdrawal is more involved than just recording the amount somebody receives. A withdrawal is actually a distribution of member capital. Your club is a type of business called a partnership. There are tax implications to withdrawing capital from a partnership. Just like when you purchase a stock, you actually have a basis for your investment in your club. When you withdraw money, there may be a capital gain or loss to report on your taxes. You can find out what your tax basis is at any time on the member status report. If you withdraw all your money from the club on the date of the report, you would have a capital gain or loss equal to the difference between this column plus any income and expenses that have been allocated to you for the current year and the current market value of your share of the club shown in this column. If you withdraw less than the amount of your tax basis in a partial withdrawal, you do not owe any immediate taxes. Withdrawals need to be entered in a specific way so that your club records get updated correctly. These things actually happen when a withdrawal is entered. First of all, the amount the withdrawing member is owed will be calculated. The number of club units or shares that the member is cashing in will be removed from your club records. The proper additions and subtractions from the member's capital account will be made, and correct tax reporting will be provided. The member will need this information to fill out his personal taxes correctly. Fortunately, you don't have to do all this accounting. All you need to do is to make sure to enter withdrawals using the withdrawal form that you will find by selecting the withdrawal button on the accounting members page. When you fill in the information requested on this form, bivio makes all the appropriate entries in your accounting. So don't just give a member a check. Until you've made a withdrawal entry, accounting-wise, he's still a member of your club and his ownership percentage is affecting everybody else's. Before you can fill in the form, you will need to know a few things. First, you will need to know what your club partnership agreement says. There are certain parameters there that your club members have agreed to you are going to use when somebody withdraws assets from your club. Second, all your records need to be correct. You need to value what the member is owed. If your records are incorrect, the amount you pay him is going to be incorrect. You'll need a temporary account to record the withdrawal in so that the cash is not deleted from your brokerage account until the check is cashed. We suggest you call this account Pending Withdrawals. You need to decide what assets to use to pay the withdrawing member. You can transfer appreciated stock, or give them cash, or do a combination of both. Your partnership agreement should include wording describing what your club has agreed to as terms for paying withdrawals. It should cover things like this. First of all, your withdrawal valuation date. On what date are you going to determine what is owed? What is your time frame for paying a withdrawal? How much time can go by between when he tells you he'd like to withdraw and you need to pay him? How much time can pass between when you value his account and when you pay him? What are your payment terms? Does your club charge a withdrawal fee? What kind of assets can you use to pay him with? Who's going to determine this and how will it be determined? Do you have different rules that apply to full versus partial withdrawals? So let's talk a little bit more about each of these things. Your withdrawal valuation date is the date you will value the member's account to determine what he is owed. Our suggestion is that you value the account 2 business days before the second club meeting following receipt of his notice to withdraw. We're going to show you a graphic depicting this timing on the next slide. It is fine if your withdrawal valuation date is different than your member payment valuation date. When it comes to the timing of making a withdrawal payout, here's a sample of the sequence of events we recommend you specify in your partnership agreement. First, a member lets you know they would like to withdraw some or all of their funds. We'd recommend that you require the request be in writing. At the first club meeting following the receipt of this notice, it will be officially accepted. At that same meeting, club members will need to review the club assets and determine which ones will potentially be used to fund the withdrawal. They will determine whether to fund it with cash or stock or both. The actual value of what your member is owed is not determined until just before your next club meeting, but the treasurer will need to perform the transactions prior to the meeting, so he will need guidelines to make the final judgment. The built-in delay in valuing a member's account makes sure members do not try and time the market and unduly disrupt your club operations. After the meeting, the treasurer must make the preparations necessary to pay off the member within the time frame specified. If stock is going to be transferred, he needs to make sure the member has an account at the club brokerage. If the club has decided stocks will be sold, he needs to place those orders. He also needs to make sure all the club accounting is up to date prior to the withdrawal valuation date. We recommend that the withdrawal valuation date be 2 days prior to the next scheduled meeting. On the day after the withdrawal valuation date, stock prices will have been updated and the treasurer will have all the information he needs to enter the withdrawal and transfer assets to the member. He should proceed with this process. The member should actually receive his assets within 2 to 10 days of the withdrawal valuation date. How do you decide whether to pay a member with cash or stock or a combination? In the case of a full withdrawal, these are the things you should consider. Our recommendation, if you have any significant capital gains in any of your holdings, is that your first choice be to transfer appreciated stock. The reason for this recommendation is that there are nice tax benefits when you make a full withdrawal from a partnership. In accordance with the tax code, the withdrawing member's basis in the stock received is their tax basis in the club minus any cash received. This means any capital gains they have on their withdrawal are deferred until the stock is sold. The remaining club members also defer recognizing the capital gain on the stock being transferred. Deferring taxes is generally desirable. If your club still wants to hold the stock, you can repurchase it immediately. There are no wash sale limitations, and the club will have a stepped-up basis in the new shares. Don't transfer stock in which the club has a loss. It's in the club's best interest to sell the stock so that all members can recognize the loss. Losses can be used to offset capital gains and possibly even some of your personal ordinary income. If you do not have appreciated stocks or you don't have enough to pay what you owe the member, your second choice for payment is cash. You can either use available cash, sell securities showing a loss, or members can make additional payments to increase your cash assets. Once you've determined how you plan to pay the withdrawing member, it's time to take action. We talked about the reconciliation process in the monthly treasurer task presentation. It's very important that your club records are reconciled and up to date prior to making a determination of what a departing member is owed. Once you have paid him, it's not very easy to correct a mistake. So do not go any further unless you are sure all of these things are correct. Your cash balance in bivio agrees with your financial statements. The number of shares of stock in bivio agrees with what your financial statements show. All your member payment entries are up to date. You've recorded all your expenses that happened prior to the valuation date. All the income you've received has been entered correctly, and all your investment transactions have been entered correctly. Also make sure your stock prices are up to date. Note that stock prices are updated late each evening. You cannot determine correctly what a member is owed by looking at a valuation report, usually until the day after the valuation date. Sometimes when you write a member a withdrawal check, they do not cash it right away. In order to be able to track this situation and still reconcile your brokerage account cash each month, we recommend you use a temporary account to record the withdrawal transactions. We suggest you name this account pending withdrawals so that you will know what it is when it shows up on your valuation report. Once you've determined how you're going to pay the member and the valuation date has passed, you have everything you need to enter the withdrawal. As I showed earlier, the withdrawal form is accessed from a button on the accounting member's screen. Here's the form you fill in. First, you identify the withdrawing member. Then you enter the date you will deliver his payment to him. The transaction date is the date the member is actually withdrawn from your club. The valuation date is the date we've been discussing on which you determine the amount you owe him. Here's where you specify you will use the pending withdrawals account to record the withdrawal until the check given the member has cleared the brokerage account. That will allow the units to be removed from the club assets, but the brokerage cash will agree with the brokerage statement until the check clears. You need to specify whether you're entering a full or a partial withdrawal. Here's where you enter any fees that your club charges. The only fee this club charges is the stock transaction fees associated with the withdrawal. They sold 2 stocks and had $20.01 in commissions. This example is a cash withdrawal. If you're transferring stock plus cash, you'd select stock here. If you do that, a page opens up where you can select the shares being transferred. The transfer valuation date is only needed if stock is being transferred. In that case, we'd recommend that you use the same date you used as the valuation date. And don't forget to click OK when you're ready to process the withdrawal. After it's been entered, you'll see the pending withdrawals account has a negative balance. The cash balance in your brokerage account is unchanged. When your withdrawing member finally does cash the check and it clears the brokerage account, you will get an account sync email that will tell you you have an unidentified debit. Identify it as a transfer transaction from your brokerage account to the pending withdrawals account. When you're done with this, you will see the temporary pending withdrawals account is now back to a 0 balance and the cash amount has been removed from your brokerage account. For each withdrawal, a withdrawal report is prepared. You get to it on the Accounting Reports page. This is what the report looks like. At tax time, you'll need to give the member a copy of this along with his K-1 form. He will have information from both forms that he will need to fill out his personal taxes. This gain or loss will be reported on his personal Schedule D. It will be reported as disposal of partnership interest. Date of acquisition is the first date the member contributed to the club. Date of disposal is the withdrawal transaction date. Just briefly, if you are paying a partial withdrawal versus a full withdrawal, the tax consequences to the withdrawing member will be different. A nice tax feature of a partnership is that a member receiving a partial withdrawal does not have to recognize any capital gain until his withdrawal amount exceeds the value of his basis in the club. We'd recommend that you pay partial withdrawals in cash. Cost basis in stock received in a partial withdrawal is not determined in the same way as it is with a full withdrawal. Because of this, it's much more complicated to determine whether distributing stock in a partial withdrawal is advantageous to the member or to the club. Sometimes clubs ask what is involved with having one member buy out another one. This actually involves making 2 separate transactions. You'll enter a full withdrawal for the member who's leaving the club, and then you'll enter a member payment for the member joining the club. If you use the same valuation date for both transactions, the new member will receive the same number of units that the withdrawing member had. We've covered a lot of material, but that gives you a good overview of the items you'll need to consider and process when you have a withdrawal.